All right, so let's go over the quick review here with S&P 500 futures market. Is we were very bullish the day before. It's relentless buying for more than 2 hours, 3 hours. So we started at 11 a.m. Eastern time and it was in a small pullback bull trend. So I said yesterday the market sees higher prices and it probably wants to buy, but not just because it sees higher prices. When a day is very bullish like that, a prior day, you have 50% probability of markets at the open wanting to buy and continue to go long is in this case. So we gapped up with bar one, but it's a small bear bar. We're not getting a second bear bar. Bulls try to buy it. We can't seem to get above the high of yesterday quickly, and then we reverse back. So they buy, there's a trend line there, right? So they bought the trend line test, and then we go back up again. So around 1 hour, 90 minutes, or 2 hours, I tend to wait for market to start go sideways and try to have a reversal. But the one thing that we have noticed here that when bears try to sell they failed. They failed right here. So what does this mean? So a bar like this selling, you have two bars, right? You got a double top there, you got a double bottom here, but you don't have two sets of double tops and double bottoms, right? So this is not a good swing. And in fact, it ended up becoming a bear trap underneath the moving average. So you got bears trapped underneath 4, right? Or the close of, if they sold the close of 4 or sold one tick underneath 4, they are trapped. Is bulls come in, they start a two-legged pullback, turns into a breakout. Leg 1 is first sell, leg 2 starts here, right? And they might even have just went up and that was the second leg, bears trying to sell with bar 7 from above and trying to get a break even. But those bears, look at the way the bar 7 came down and tested. Bar 7 failed to test. Now this is very important, pay attention. Bar 7 failed to test the close of bar 4. That's where the bears started to get trapped. So if a bar 7 is selling above these bars, trying to get a bear flag, and not able to close below bar 6, but again, if there's anybody sold there, again, thinking this is a bear flag, then getting in more trouble and getting trapped, and 7 is not even testing the close of 4, bears are going to realize that they are in deeper trouble and they're going to quickly exit out. Take the loss, exit out. And when that happens, you get these big bars. That's because many bears are exiting out of the market extremely fast. That's when we go and test these highs. Okay. So now you had a imbalance bar, which is a gap bar, filled and corrected by another gap bar. Okay, so what does this mean? That means you're in some kind of a trading range. Even though we're making highs, what happens at the trading range highs? We get 80% probability of failure to break out. So what does that mean? That means if there's any bull flag, that's going to fail to break out. That means you're in a trading range. Most likely the 50% of that trading range will be tested. But what about the bears? They're still stuck here. They need to sell. They're looking at this bar. They're looking at the ATR. ATR is 10 point at that time. Like, wait a minute. We cannot sell 5 points above this high. We cannot, maybe we can sell 10, start to sell 10 points above this high. And that 10 point is around here. And you can see that bar 11, they started to sell. When they start to sell and it goes higher, they're going to sell. They're hoping to bring it down to somewhere. Maybe they sold here, maybe they sold here, somewhere average. Okay. So if they sold the bar 11 close, they got their break even. All right, market is closed, everybody. So I'm going to look at the questions in a minute. So they break even right here, but they did it with twice. They did it 2 try. Okay, 2 try. So 1, 2. They still cannot close below the average price to bring market down here. If any of these bars is if any of these bars, okay, were to close below this line, I would have expected market to come down here. But first try, second try failed. Gap, bullish gap is still open. So now we have a bull flag, double bottom bull flag, or maybe wedge bull flag. 1, 2, 3, 10, 14, 19. So that means I can buy above a strong bull bar. Oh, wow. Okay, bar 19 is a phenomenal bar. And it's also closed more than half, just about 50% of body above the moving average. I can buy above this and I can target the prior high, right? So there it is. It goes right back up. But if bears haven't taken the chance to sell again, now they see 1, 2, 3, or 1, 2, and 3, okay, possible double top with another bear body, they're selling for more. They're hoping the market can come down here. They get a wedge top, they bring it down to is maybe this low. That's the last third leg starting point, so that's always a target. And then furthermore down here, that's the second leg starting point, right? So what does that mean? So you measure again, maybe next time, this time from where they exactly got stuck, and you sell the close of that bar. Look, that's the second time that the bears are selling and they're able to break even. Again, I'm not seeing any bear bars closing below this average price. What does that mean? Take that average price, get out of the market. These bears are not here. They're not interested anymore. Most likely they will now wrap up their trades and they're going to exit out. Okay, so that's what's happening here. So now you're getting a nice bull bar, right? You also have a bear flag fail to break out from underneath the moving average. What does that mean? That's a spike, pullback, several legs down, you got a wedge bottom. When you have a wedge bottom like this, right, is what happens, right? You have a spike and channel down. When it starts to reverse, where is it going to go? It's the channel starting point. That channel starting point is your pullback bar. That bar is bar 25. So what you're going to do, you're going to look for bulls going and testing, actually not just bar 25. These bars are, they made a higher. So channel started there. So we're going to go and test that high. If you see a strong double top with a strong bear body, you can sell that and expect that low and that low and that low to be tested. We did not get that. So if we're not getting a double top at the moving average, that means there's a failure of a failure of a failure is a swing setup, okay? So that means a swing setup is right here. What am I looking for? Well, bears don't have two bars. We got that. Bulls are started to buy. We got that. There is a bull flag already formed, just like this one. Bull flag already formed, and that's a spike. Pullback with bar 32. Channel up. Bears came back and tested the pullback bar 32, but cannot close a bear bar. So what do? You look for two bars. Failure of a failure is a swing setup right here. You buy above that 40, put your stop underneath 30, and then 39, and then you're going for 2R, 1R, 2R, 3R. This is where we got stuck. Now, what happened there? I want to check something. I want to see if the bulls, okay, so the bulls got the 3.5, but they can't seem to get there. All right, that's fine. This is where I was still long. They went up there, and then I pulled up the encyclopedia. So let me find that slide again so you guys know how I found it. So at this point, I know I have a bear. I know I have a bear trap, right around here with bar 4 and 5. So I'm going to go to the encyclopedia, and then market form a trading range. So what am I going to do? I'm going to go to the Brooks Encyclopedia. You can have access to this, okay? If you have 60 days access to course, then you can make your request and you only pay like $1.99 and you have lifetime access. This is Al's homework of thousands of charts all organized. So now what am I looking for? I'm looking for a trading range day. That's TRD part 15. Okay, so what am I looking for? I'm going here, it's trading range day. These are all organized. So I'm looking for bear trap. Let's see, bear trap. That's it. Is trading range day, bear trap. They're all in here, right? You can go one by one. There's a bear trap right there. There's that one. But let me move this aside. Let me get this in here so we can start to look around and see. Okay, that's a bear trap. That's grinded up, right? They made a new high and it just went up. Ours is a explosive, but maybe this is the one. I'll go to the next one. Another bear trap. So basically, when these days are on live charts are happening, you're pretty much getting similar price action, and you can just go through that and find your template and literally apply how the rest of the day could trade. So where was that? I found that that was the reversal, the bull breakout. Here is a double top. This one ended up staying sideways. I had a bull breakout. So you can browse through it, or you can type bear trap, then trading range, or bull breakout. Look at this bull breakout that came in at the end of the day. And so you go through them, and here's another one. Is we came down below the moving average, and the bull breakout started, and it came down right here, right? And wedge top comes down, tries again, fails, and breaks out and goes sideways and closes around the moving average. So everything you're looking for is pretty much here. This one came down, but look at those strong gap bars. We only had this and we failed, and there was no time left. And here's another one. It came down, look, and then went back up and closed. It came down, went back up, and closed at the moving average. So everything you're looking for is in Encyclopedia. It makes it very easy to find your path. Okay, so I got what I got. So basically, I go for 2R. Is anything more than 2R is bonus, right? And then market goes up. So now we have this big bear bar, 56. I'm looking for a two-legged move down. So here's a leg one. We go sideways, and then we go up, and here's a leg two. And it failed, and the market goes up. And you can say, hey, this was up, this was down. 55 is also pause, and then here's the second leg. Bulls take over. Leg one, pause. Leg two, pause. Leg three. So there's a wedge top there. Bears will sell again, but I wanted to put a buy order. I was still long. I wanted to put a buy order above 54, and I gave up once I saw this bar. Okay, then I decided to put a buy stop order. So I want to add to my long because I'm targeting. We had a bunch of targets that I removed. We met all of those targets except these. Then I put a buy order above 62, right? And then market printed 63. So you got two dojis side by side. It's kind of a doji, both of them. When at the highs I see two dojis side by side, I wonder if I'm going to be able to actually get another breakout. So I told everybody, and you guys were here, you listened, and there is a double top, double bottom, double top, double bottom. So you have failure of a failure, okay, is swing setup right here, okay? So somebody asked the question, how do you enter with failure of failure swing? Where does the swing? I said, look, if we get two bull bars, we might swing back up again. But if we get the second bear bar closing on its low strong, then the stop is going to go there and the bears are going to sell. As soon as I said that, bar 64 started to take out the 63. I canceled my buy order at the high. Okay, at this point, I'm not expecting a breakout. Now I have two bars. You put your stop there or there, but I'm going to stick to the rules for this setup. Is this market came down so fast. So that's the 1R, that's the 2R, that's the 3R. I had a buy order at the 2R because I want to do a dollar cost average and buy lower and fix this trade. So what I've done, my stop is down here. I bought, okay, and then the market went up. And I did tell everybody, bulls will buy. They're going to buy because they're waiting for bears to make some money. And we just tested the breakout test area. This gap is very strong. Most likely they're buyers waiting here. or buyers like me looking for a concrete place, which is where the bears will take profit. 1, 2, that's the 3R. I ended up buying a little bit early. This kind of scared me, but just went up, so which is great. Then with this bar, I exited out of my runner. And I said, I'm not trading any of this because this looks like it wants to create a bear flag. There's a gap here, okay? These gaps are important. Is in this area, okay, many bulls probably exited with this bar already. But the bears didn't get 2 consecutive bear bars, but you got 3 bear bars. That's always in short already. But bulls are fixing. In the meantime, high 1, high 2, high 3, high 4, high 5. High 5 is actually a bear flag. So I told everybody they're probably going to sell. Plus, we're going sideways all the way to bar 75. You know, either bar 75 is going to close this bear gap, and then we're going to break out finally. But if that fails, then we're going to come down because many bears who sold stock, they want a second leg down. But I said, if you see something like this, do not trade it because by the time you sell underneath this bar, they're going to trap you and it's going to go up. By the time you buy or reverse it because you lost a lot of money, they're going to reverse it and they're going to sell, and now you're going up. You lose for the second time, so you're a loser twice. So this is the time you do not want to trade. And if you want to learn about this, again, I'm going to repeat this. I'm trying to emphasize this as much as possible, because the only way you can learn about this is Brooks Price Action course. Either go to the Forex course or the basic course. Go to this right here, okay? Trading different times of the day. Seriously, find some time, everybody, tonight and go and watch these. How to trade the open, how to trade the middle of the day, trading the middle of the day examples, 80% rule, trading the end of the day examples, different kind of examples, the traps, right? These are very important. If you master this, you can make money any part of the day, okay? Day is divided into 3 sections, A, B, C. The morning section, the mid section, and the end of day section. So if you study well, you can catch great swings. But anyway, I'm done with my session. Brad Wolf is starting his YouTube um, YouTube session in about 3 minutes, so he's going to do an end of day recap. So don't miss that. But I want to take 1 or 2 questions. I still have time. So let me take a look at the questions here. Good afternoon, Rose. Could you please analyze? Oh, I don't have time to analyze that. But what you can do is you can take the chart. Can you post the chart onto Discord? Then I can look at it from there. Yeah, I mean, there are no more questions here. I'm going to take a look at the Discord and see if there's anything there. I think I answered all of those questions throughout the live session. So hopefully this was good, and you learned something. Okay, this is all great. There are no questions. So I'm going to let you guys go because I want to join Brad Wolf on YouTube as well. So have a great day. I'll see you guys in the Brooks Price Action Trade Room tomorrow morning, and then Brad will close the entire week for us. Bye, everyone.